Hi, this is Mohammed Hock at MAH Chartered Accountants, and this video is all about the recent government support for businesses in light of the coronavirus. The 80% job retention scheme was announced a while ago, but the full details have only been known since yesterday or the day before. There are quite a few details, a lot of criteria, so we're going to send a full email to our clients explaining it in detail. So I won't go through every single one of the criteria right now, but I'll go over the key areas. So the number one thing I'd like to say is that you can't claim it for anyone that's working. So if staff or directors are sending emails, making phone calls, they're doing some sort of activity to support customers, they're doing any operations, any marketing, you can't claim for that. Apparently, staff can do voluntary work, but they can't generate revenue. Also, if we know that companies are making money out their staff, we're not allowed to claim for them. HMRC said they may audit these claims, and we don't want to break any rules. So that's the first thing. If staff are working, they're not eligible. So who is eligible? Well, staff who have been furloughed are eligible. So furloughed means that basically they can't work or they've been laid off. So for example, a coffee shop has been forced to close down, staff have been sent home, they can't work. That's a typical scenario. I mean, in terms of our clients, we've got one client is a healthcare provider. We have appointments with patients one-on-one. They can't do what they're doing. They can't do what they normally do now. Another client in the aviation sector, their sales have completely stopped. We've got e-commerce clients. They would like to sell, but they can't. They've had to shut down as well, basically. I'm sure there's others, but these are the ones that I can remember off the top of my head. So if the directors or staff are not working, they're potentially eligible. Some of the key criteria are that they must have been on the payroll at the end of February 2020. They can be full-time or part-time, even flexible or 0 hours, but they can't be on reduced hours or reduced pay. Either they're working or they're not working. How the process works is you have to file a payslip every month, say for March, April, May, maybe even June. You file a payslip, and then at the end of April, HMRC are due to open a new portal to file the claim. So in that claim, you have to work out 80% of the regular wages, up to £2,500 a month, plus employers' national insurance and also the minimum pension contributions. So what are regular wages? Most staff get paid the same amount every month. That's quite easy. You're not allowed to include bonuses or commissions or fees. Where pay varies, HMRC will look at the average pay over the last 12 months or from when they started working. Some of the admin now, it's quite an important issue actually, is if your staff contract doesn't mention anything about laying them off or what happens if there's business interruptions, you'll have to agree with them that they will be furloughed. So the staff can disagree. They can say no, they don't want to be furloughed, and then you'll have to consider, do you want to make them redundant or terminate their contracts? And you'll have to look at the normal employment rules and regulations, and if in doubt, definitely seek legal advice. It's quite a complex area. What you have to do is you have to write a letter to the staff saying they're furloughed. What we'll do is we'll send a link to a template in our email for this. Okay, next up we have the self-employment grant scheme. We did have high hopes for this, but unfortunately it does not apply to directors. So the vast majority of our clients won't be able to claim under this scheme. It only applies to sole traders, so people who don't have a company and they're raising invoices in their own personal name. So sole traders, it applies to partnerships as well, potentially LLPs. but definitely not directors. So how does it work? How it works is in June, HMRC will contact you and they will pay you a grant of up to 80% of your average monthly trading profits, up to £2,500 a month. So what they'll do is they'll look at the last 3 years of tax returns, or however many you've submitted in the last few years, work out the average, and then you get one lump sum in June. So we can't do anything now. It's just something you have to wait and see. Also, if your taxable trading profits are more than £50,000 a year, you can't claim, as far as we're aware. And also, at least half your income has to come from self-employment. So if you have rental properties, or you're working for another company, at least half your total income has to be from self-employment. Tax bills have been deferred. I think this wasn't in our last update, but we have spoken to quite a few people about it already. The big one is VAT. So VAT bills that were due to be paid by the 30th of June 2020 do not need to be paid now. You only have to pay that by March 21. So for example, for us, our February quarter was due to be paid 7th of April. We now don't have to pay that for another year, which is really good. And it's automatic. You don't need to contact HMRC. They're going to do it automatically. So what we're doing is when we send emails about VAT bills, we're putting the amount to be paid as usual, but we're going to say, look, you don't need to pay it until March 21. And you do have to make a plan of paying it back, otherwise you could get hit with penalties and surcharges later on. So that's VAT. The second one is self-assessment. Most of our clients have got tax bills coming up in July for the instalment, but that's been pushed back now to January 21. Again, that's automatic. You don't need to do anything to claim that. Now, the other ones which are affecting our clients are PAYE and corporation tax. Unfortunately, these are not being automatically deferred. There is a coronavirus helpline. We did include it in the last email, but we'll send it again. Basically, you have to phone up HMRC, and what we've heard from clients is that for PAYE, they're deferring it for 3 months. Corporation tax, other clients have had agreed payment terms over, various periods. We can't call them. You have to call them up, unfortunately, and agree a date for when you're going to pay them. Protection for tenants. So this is quite a big deal as well. So commercial tenants are protected from being evicted. Technically, you still have to pay the rent, but if you don't pay your rent on time by the 30th of June 2020, your landlord is not allowed to evict you. So usually, they can, if you have a commercial premises, potentially within 2 weeks, your landlord can kick you out if it's not a mixed-use building. But so now we've got the landlords can't do that, and also I think courts have generally shut down almost. They can't take you to court right now, and we would suggest you get in touch with your landlords and ask them if you can get some sort of rent reduction or rent-free period. So for ourselves, we've been in touch with our landlords, and we have been given a rent reduction. Speak to them. We've heard some landlords have said they can't give a rent reduction, but they can defer it, and it can be repaid in installments once everything blows over. But you must get in touch with them, because if you don't get in touch with them, if you don't agree with something, as soon as 30th of June passes, they might evict you. So get in touch with them straight away. For for residential tenants, again, the government has said nobody can be evicted in the next 3 months. So again, towards coming up to the end of June. Again, landlords may try to evict you afterwards if you don't pay the rent. So get in touch with them. You may be able to get some sort of payment holiday, or again another rent-free period. But you have to get in touch with your landlord as soon as possible. Business interruption loans are a scheme that was announced a while ago. Government announced they're putting £330 billion into this. The way it works is you have to apply to a bank or a lender who's partnered with the British Business Bank. So you apply for the loan, and then if you meet the criteria, they'll give you a commercial loan. If the computer says no, the bank can go and rely on the government scheme where 80% of the loan is covered for the lender, and then they might say yes. But you have to be really careful, because the banks can actually offer you a normal commercial loan first, and they could give you crazy interest rates. They could give you a personal guarantee. You want to avoid a personal guarantee as much as possible, because under this scheme, you may have heard about the 80% guarantee. That's for the lender. The business is 100% liable for the loan. The government will pay the lender, but the business has to pay the lender. If you give a personal guarantee, what that means is, even though your company has limited liability, if your company cannot pay a loan, the bank can come after you and your personal assets. So they'll come after whatever's in your bank. They'll take your car, they'll take your house, they'll take the shirt off your back, or maybe not exactly the shirt off your back, but they can make you bankrupt. You want to avoid it as much as possible. And what we understand is the big four banks have agreed not to take personal guarantees on loans below £250,000. But again, be careful. If you get offered a loan, check the terms and conditions. We heard one case, a company was offered a loan of 24,999. I think that's just below 25k starting point for the business bank, and they offered an interest rate of 20%. 20% interest rate is mad. Don't pay that. Just don't. So yeah, that's the business loan. We'd suggest you go to a normal bank first. Start from there, and then if you can't go from there, go to the business bank website, and there's like 40 different partners involved. Maybe you can get an overdraft, maybe you can get some invoice finance, maybe you can get a term loan. There's a lot of different options available. We have heard of people getting successful loans. Apparently you can get up to 25% of your turnover, or double your annual wage bill. So there are some potentially big loans out there. Also, if it is on a government scheme, the government will pay the first year's interest as well. So this is what, again, I say you have to be careful. So if you get an offer, is the bank giving you a normal commercial scheme that they give anyway, or are they giving you this special interruption loan? Because interruption loan doesn't have a personal guarantee, and the government will pay for the first year's interest. So just carefully check the terms and conditions and try to request the government scheme if you can. Grants for small businesses. This was in our update before, but I'll just go over it again. A lot of clients have been asking us about the £10,000 grant. This is only available to businesses who have commercial premises and the council is aware of them and they're claiming small business rates relief. This means that your rateable value is below £15,000. Generally speaking, your rateable value is often similar to your rent. So if you're paying more than 15k rent a year, probably you're not eligible. So for example, in our old office, our rent was about £5,000 a year. When we moved in, the council, the landlord told the council we moved in, the council sent us a rates bill, and then we applied for small business rates relief, and then we didn't pay any rates. But the council had all our details. So how this 10k grant works is the council will be getting in touch with eligible businesses, because they already know who's eligible, because the businesses have to claim small business rates relief, so that the council already know who's eligible. They'll get in touch with those businesses and then make arrangements to pay them 10k. So if you're in a shared office or your co-working space, or you're paying a membership fee, and you don't have a relationship with the council, you don't pay rates directly to the council, unfortunately you won't be eligible. If you're working from home, generally speaking, home businesses don't often have to register for rates, and you can't even go and do it now, because the grant will only be payable to people who were eligible as at 11th of March, so you can't go and suddenly claim now. There's also a 25k grant for retail, hospitality and leisure businesses, but that's only if the rateable value is between 15,000 and 51,000. I don't think we have many clients that are eligible for this, but again, the council will get in touch with you if you are eligible. Statutory sickness pay. This has been around for a long time, but basically, if staff can't work, you have to pay them sickness pay of £95 a week. Usually, you can't claim it back, but if someone can't work because of a coronavirus or they have to self-isolate, then you can pay them £95 a week and the government will pay you back. Now, £95 a week doesn't really sound like a lot, so you don't have to pay it. First of all, you can just pay the staff the normal wage anyway, or you can ask them if they would like to use up their holiday pay. Yeah, so you've got those three options. So you can pay them normally. If they agree, you can accrue holiday pay, or you can pay statutory sickness pay of £95 a week. Also, before the statutory sickness pay only started from the 4th day of illness, but for coronavirus it will start from day one. They have to give you, well, they're supposed to give you a certificate of sickness after 7 days, and I believe they should be able to get that automatically, some sort of government scheme. None of our clients have actually done this so far, so I haven't had to look into it myself, but I think they can get a sick note through this search online. There's some sort of auto sickness certificate. They should be able to get that. Can directors claim the job retention scheme? This is one of the key questions that people have been asking us. So there was a webinar yesterday run by the CBI, and there was a guy from the Treasury, and he did say directors can claim. Also, on HMRC's guidance for the self-employment scheme, they did say directors may be able to claim. So directors can claim. However, we need to look at a few technical details here. So number one is directors have got two roles. One is as an office holder, so they have to run the company, file accounts, file confirmation statements, that kind of thing. And secondly, they have the day-to-day operations where they're working in the company. So the first one, the Treasury have said, look, if they're fulfilling their statutory obligation as a director, as an office holder, that doesn't preclude them from being furloughed as an employee of the company. So, if you have to file accounts and other documents in the meantime, you can still be eligible. Now, the big thing is, are you actually an employee? So we've got some clients who are sort of a little bit larger than others, and they've got non-executive directors. So these are directors at company's house. They are fulfilling statutory obligations, but they're not employees. They haven't got employment contracts, so they wouldn't be eligible. It does get a little bit technical whether if someone's employed or not, but for the vast majority of our clients, the owner managed businesses, there's between 1 and 3 directors usually, and the directors are generally running the business. They're having to deal with customers, deal with suppliers, deal with staff, deal with operations. They're doing loads of things basically. So they're clearly working for the company. Most of our clients are using model articles, or they're using articles based on model articles with a few additional clauses. And if you look at the model articles, it does say directors can work in the business and they can be remunerated, and it's up to the director to decide how they'll be paid, when they'll be paid. It normally accrues on a day-to-day basis. So for most of our clients, they are working as employees in the company. They are allowed to take a salary. The only thing is maybe they might not have documented it. So there'll be a link in the email that we send to our clients where it kind of mentions employees have got a right to receive written contracts, and companies have to do this within 2 months for starting. So, if a director is working for the company and they haven't received an employment contract within 2 months, they need to make that document. So we'll put a link to a template, and it says the start date on there. So usually the start date will be the appointment date as a director. Some of our clients, they were appointed many years ago. We've been filing payroll for them for many years. So they should definitely put, the date, whenever they started. So you don't have to have that written document right now to claim, but, HMRC may ask for it. So you might as well get your house in order, get that document ready. That's the first thing. So we believe most of our clients, the directors, will be employees. Now the second thing is, what salary should you put on your on the claim? So a lot of our clients are paid annually, and it's up to the directors to decide what the remuneration is. Generally speaking, you can decide what your level of pay is. For tax purposes, for corporation tax, HMRC can, and other taxes, HMRC can disagree with the salary if they believe it's not in the market rate. So if you take, I don't know, £200,000 salary, that's quite a lot of money. You have to justify it. But if you're taking 20, 30 grand, for a lot of our clients, we would say that's below the market value, because if you were to hire someone to do the work that you do, you'd be paying a lot more. I'm a director. If I was to hire someone doing what I do, it would be a hell of a lot of money. So if I was to take that as a salary, I can justify it. So look, if I was to pay someone to do my job, I would need to pay, X amount. So if I was to take a 20, 30k salary, that would be well below the market rate for what I do, and I can easily prove that. And I'm sure most of our clients, directors can prove, because a lot of them, they were working before, so they know this is what they're working before. They've had to hire staff below them. It's not difficult to prove the market rate for a salary. So in terms of what you should do is, you can't do a bonus, but if you're saying, look, for the year to March 20, your annual salary is X, that's included on a daily basis, it's up to you to decide that. So what we would say is, there are three typical scenarios. So the first scenario is you take a small salary of £8,600. At this level, there is no income tax, there is no national insurance. The company will save tax of about, got the figure somewhere, £1,600 tax is saved. So option one, £8,600, that's the simplest one, that's the easiest one, that's the lowest risk one. If you've been taking for many years, just take that now. You don't have to pay any tax up front, and you'll get a tax saving. And if you claim 80% of that grant, it's £570 a month, which is about £1,600 for over the 3 months. So that's the easiest thing to do. Just take a salary of £8,600. Second option is a salary of £20,000 for the year. What this involves is a tax bill up front of £4,400, but there'll be a corporation tax saving of £4,000 as well. So the upfront tax and the tax saving kind of net each other off, and the grant will be £1,300 a month, or £4,000 for 3 months. This, we believe, is the most tax efficient. £20,000 is not like an excessive amount, and if you call up HMRC, you can defer the PAYE. Clients have given us feedback, they've had 3 months of deferral. So this is the most tax efficient, but only if you're making a profit or you've got your tax bill coming up soon. If your corporation tax bill is not for many, it's not for ages and ages, or you're not going to make a lot of profit, do you really want a 4,000 income tax bill on your head? You might not want that. If you're loss making, I would say definitely don't do it, because you're going to get the grant now, but you're going to have to pay tax to HMRC for income tax. It's just not worth it. The third option is kind of maximizing the grant, or not maximising, but close to it. So if that's 30,000 salary. So 30,000 salary, the grant is £2,000 a month, which is 6,000 over the 3 months. But your income tax bill will be £9,000, which is quite a lot of money, and your corporation tax saving will only be £6,000. So you'll get a grant of 6,000, but you'll have a negative tax bill over the year of £3,000. So overall, you're making 3,000. So we'll definitely say, look, option 2 is the better one. You take 20,000, and the income tax bill and your corporation tax bill basically offset each other, and your grant will be £4,000. So effectively, you'll be £4,000 better off. Again, with the caveat that the income tax bill will need to be paid at some stage. So to sum up, if you're loss making, you're going to keep it simple. Take a salary of £8,600. You will get a grant of about £1,600 over 3 months. Or option 2, if you're profit making, you can take £20,000, and you get a grant of £4,000 over the 3 months.